So, welcome everybody to this week's podcast episode for the Financial Freedom for Physicians podcast. And today we have a special guest. His name is Dan Kryzanowski from BV Capital. And he was a recent speaker at this year's FinCon in Austin. And we're going to talk all about real estate, syndicates, private equity. And so I'm going to bring up his bio. So Dan is an active capital raiser, equity owner, and passive investor, generating double-digit yields and lower taxes via commercial real estate. His investment portfolio is extensive, including 2,600 plus storage units, 1,500 plus multifamily doors, and dozens of industrial infrastructure and residential properties. He's personally raised millions of dollars from accredited investors and family offices and empowered his partners to raise seven figures on multiple occasions. He's the founding vice president at Rocket Dollar, unlocking the $10 trillion pool of untapped retirement assets for the alternative investment community. He previously led commercial real estate initiatives for GE Capital in Mexico, South America, and his superpowers include self-storage, self-directed accounts, and through solo 401ks, self-directed IRAs. So without much ado, welcome, Dan.
Awesome, Chris. So great to be here. And thank you for reading the whole bio. I just think that means that I'm pretty old. So hopefully value to folks out there. Thank you.
Yeah. No, we connected this couple weeks ago in Austin at FinCon. Both of you and me were speakers there. And, I thought it'd be good to do a, podcast collaboration. So, tell us more about your story and we'll get down into the nitty gritty of, BV Capital and all of the services and products you offer.
Sure. Yeah. I mean, my quick background, originally from Scranton, PA, child of the 80s. Dad was a high school principal. Mom was a social worker. Half my family was in education. The other half was in medical, basically. So, with that as a background, like many folks on the call, it was heads down, study hard, get a job, maybe be pensioned out, maybe get an IRA. And even when I did my undergrad at Wharton, with a lot of smart folks, that was the continued message. And I think collectively, particularly say up until 2008, I think everybody was heads down with life. And there was never a second thought like, hey, this is great. We'll have our 60-40 stock bond allocation and everything will be good. That said, benefit of having a wife from Mexico, you don't want to be in the cold too long. So we made a conscious decision to leave the Northeast, to leave GE Capital over a decade ago to come to Austin. So, I'll repeat, well before the rest of everybody moved here. And since then, I decided, realize, hey, you can take back control of your dollars and really work to make them how you want to in a very tax advantaged way. So, we'll talk a little bit later between liking and trusting somebody. It's great to be liked. It's great to have 100 likes on Facebook, but trust comes down to when money moves. Or frankly, if you want real world experience, I'm sure a lot of doctors say anytime that, especially that we're in the military, I really got some real world experience when, the bombs were dropped. So, in a similar sort of sentiment, I started investing passively. Here in Austin, a mix of bars, restaurants, and then also more so real estate. And then my light bulb moment was learning that I can use my retirement dollars to invest passively in real estate. So this enabled me to invest across a bunch of multiple asset classes all throughout real estate. And ultimately, I found myself becoming a guru, as you kindly shared in the intro, in the worlds of niche, such as self-storage, industrial, and, maybe out of dumb luck, a lot of these great deals are here in Texas. So kind of partnering with the best of breed across Texas to offer what I feel are truly fantastic passive investment opportunities for accredited investors.
Yeah, that's a great introduction. And I want to point out to the guests that you started out your career in Wall Street, and now you're doing, private equity and you doing self-directed space. So what led you to this self-directed space, and what are some of the similarities or even differences, what you experienced on Wall Street and what you're doing now?
Yeah, great question. I mean, I grew up on the trading floor of Wall Street. And in hindsight, I joke if what I did on the debt side, we'd be talking on my island right now as a multi-millionaire. But I would have literally caused a financial crisis. So probably good for the soul, not as much the pocketbook, as they say.
Uh-huh.
But what I learned looking back from this experience is that you don't have to be the smartest. I do think hard work and grit helps. Street smarts helps. Grit helps. Which once again, the longer you're in school, or kind of the smarter we are, the more letters we have at the end of our name. It's not as apparent, and frankly, sometimes not as easy to get back to kind of the street smarts and using your God-given talent to frankly have abundance for you and everybody else in your community. So I think my antenna was probably up a little bit more, and I referred to the 2008 point because I also think my extension at GE Capital was an extension of Wall Street, where frankly, you had a big company name. Every sales call was easy to at least get. You had obviously the slickest marketing at the time. You had some sort of sales or marketing budget. In hindsight, especially for a lot of us solopreneurs, like wow, that was very easy. But at the same time, you wanted to invest in something, you had to go through your compliance team, and you had to be, especially, I know social media wasn't big back then, but the equivalent thereof, you had to be a little more cautious what you would share, what your opinion was, what education you wanted to push out there. So you were very limited, which I think culturally also, I think was probably a decent move, and it was a comfortable life up until 2008. That said, I was fortunate to maintain, I think, a very healthy career at GE. But my antenna was up for what else was out there, and a lot of this, frankly, was based off of lifestyle. For those of us that are familiar with New York, did you want to do the commute or reverse commute every day? Or did you want to get your hands dirty and be very tangible with folks that maybe did not have the benefit of having a Wharton or pick your fancy school on their resume? So Austin, especially Texas, you'll get humbled really quick. Nobody heard of UPenn. Everybody thought it was Penn State. The football team. Uh, down here, if you're not UT or A&M, you might as well not have gone to school. So a little bit of humble pie never hurts with that, but. Yeah, I mean, that said, that was my sort of backdrop, and my big moment here was we were co-best men. We were co-best men in a wedding, and the gentleman that I was with, he he said, "Hey, we're shooting the shit a little bit. What do you do?" And he said, "I flip houses," and I'm like, "Okay, interesting." And he said, 15%. I'm like, whoa, that's really interesting. Then he said, did you know you can use your retirement dollars? And for me, this was a slight bulb moment of, learning what was out there, meaning the world of private real estate, the huge TAM, total available market, which is frankly 10 trillion with the T. And then over a relative short time, I got to learn how this world played out, and, have since probably invested in, as you alluded to, 20 plus deals, raised X million. And I think what's most valuable, and I'm sure you feel this in the medical community, at least in my corporate world, I've at least made X thousands of people aware of this world of private real estate. So now it's just the point for, to nudge some people that never made their first deal, or to really, for folks that are a little more versed, say, okay, now let's really start talking asset classes, different tax benefits such as return of capital, and how to really get a true diverse, as I like to call it, 21st century diversified portfolio.
Nice. Yeah, I like that. That's a very good answer. And so now you've worked, you've worked on Wall Street, you've started your own company, you built that up, very successful. And now you work with a lot of accredited investors, and a lot of accredited investors, they have access to a lot of types of investment vehicles that the general population doesn't. So how do you show accredited investors how to invest their IRAs once they have the freedom to invest in anything they want?
Yeah, great question. And so when I was at Rocket Dollar, and for folks who may not be familiar, Rocket Dollar is, and they say this in a specific order, is a checkbook control self-directed account provider. So this can mean the self-directed IRA, the SD IRA, or it can also mean the solo 401k. So anybody that is self-employed or a husband-wife team, I would strongly consider learning more about the solo 401k, which I'm happy to have one-on-one conversations with anybody offline from here. Once again, it goes down to education. My big premise at Rocket Dollar, standing up the BD and marketing side, was to bring on a variety of sponsors and also a variety of investors, how they built out this book. So whether it was self-storage, obviously multifamily is pretty vanilla of a transaction across the country, showing the benefits of industrial and literally drawing it out for, hey, here's what an industrial property or an industrial portfolio can look like. And then, matchmaking back, talking about duration, whether this is a 1-year hard money loan, whether this is a 7-year development, whether this is a 3-year quick value add flip, like in workforce housing, or something down the fairway, like a 5-year industrial. It was just kind of fun conversations with, hey, here's what I'm doing, show me mine, I'll show you yours. And we went from there.
Yeah. So it sounds like you're very experienced in investing in alternative assets. You also do a lot of like niche commercial real estate, land, industrial self-storage. And I know a lot of physicians are interested in multifamily, but in terms of the land, give us a general overview of the land, industrial, and self-storage. How, what are the benefits? How is it different from multifamily apartment investing?
Mhm.
And then yeah, we can go from there.
Yeah, and I appreciate your order of land, industrial, self-storage. That's probably the order of my expertise. What I would comment on land, as Mark Twain said, buy land, they're not making any more of it. And I think that holds true, because you can do a lot. And I would preface, a few things you want to think about. Is the land connected to water? Can you literally plug in? Is the land permitted already? Which it might seem like something as simple like, hey, I'm going to put up a little building. Well, that may or may not work. And depending on where that land is, you might run into small town politics. So these are things just to be, I would say, at least speak with somebody before you do just blindly purchase a piece of land. Industrial is great because industrial, I like to say, is kind of everything else that is not land or an easy to identify asset class. So it's not an office building, it's not a retail strip mall, it's not a hotel, a few other obvious ones. Industrial is kind of everything else. So it can stretch from your typical industrial park that makes widgets. It can be a paper supply company. Last mile industrial is very common. So think Amazon, that the final kind of warehouse it goes to. And then you get something like a big Fort Knox that guards money, that's Department of Defense certified. And then on the flip side, an industrial showroom, which I purposely don't call retail, because it's not a retail shop. It's a place where the tradesmen go to look to decide what they're going to purchase. So industrial is actually a beautiful asset class, and it's probably the quietest one out there when it comes to these top 5 or top 10 lists in terms of growth. So let's take Texas. I know a fair amount of your audience is here in Texas. Is that wow. I mean, we have Mexico, we have the port, we have everybody moving here. Things are not going to go away, meaning, the movement of goods, across, frankly, North America. So we're in a really great position here in Texas, and particularly folks that have been boots on the ground here for multiple decades. That it's very advantageous. Like in any market, you want to learn if things off market, but industrial sometimes is a little bit more of a conversation, talking to a well-respected, $1 billion plus revenue tenant. That's going to be your single tenant on a triple net lease, which means, the tenant is going to pay for taxes, insurance, et cetera. And what I like about industrial, especially with the single tenant, it's like a bond. You know what rent you're getting now, what rent you're going to get, say, on the 5-year renewal, on the 10-year renewal. It's pretty simple from that standpoint. So I love this because I consider industrial the bond cash replacement. And coincidentally, not to knock my multifamily buddies, but the yields and the IRR on industrial, I think, are finally crossing multifamily, which is kind of comical. But I think, what that means is that it's going to hit the headlines pretty soon. That industrial is new hot. I know, new hot. Just now, trust me. And then self-storage, and I can talk for hours on storage, because the big reason is I think it was a need to have, and now it's becoming a must-have. So what do I mean by that? 20 years ago, about about 3%, 5% of Americans use storage. It's been up to about 1 of 10 recently.
Uh-huh.
And quite frankly, it was a nice to have. It wasn't a super need for a lot of people. What we've seen, I think, post COVID, and the things that are slowly creeping into headlines, I call it the Wall Streetization of our residential landscape. So
Uh-huh.
whether it's private money, Wall Street, they realize there's frankly an unlimited money supply. And if you really step back to see who really owns everything and it rolls up, it's a very small collection of families and private foundations. So with that said, somebody that say has a 2 and 2 and needs that extra bedroom, you're not going to find a 3-bedroom apartment. You're not going to find a 3-bedroom house. So what does that mean? In case you want to feel like you're a hoarder, you're going to have to move stuff into storage. And I'm not talking about like, the Christmas tree that you don't want to look at the other 11 months of the year. I'm talking about your kids' winter clothes. I'm talking about tax documents. A lot of folks are going to be space burdened and have to decide to pay an extra 1,000 for an extra bedroom that they probably can't even find, or an extra 100 for storage. And it's just going to become one of your expenses going forward. So, with that said, there's a lot of meat on the bone. I think even with the 10,000-ish properties that the publicly traded REITs and the large guys own, but on top of that, 4 out of 5 storage units are owned by a mom and pop, that may not have the level of business sophistication as some of the larger guys out there. So, to find a storage deal off market, and once again, who are the folks that have been educating their audiences for decades? Who's been boots on the ground? Say, for example, here in Texas, these are the folks you want to partner with. Just a final side note: a good friend of mine, he did that. He led with education, led with experience, and he just sold his portfolio. I won't share the exact number, but 9 figures is probably a good estimate. Here in the world of storage. So yeah, there's still opportunity here for those that want to be involved.
Nice. Yeah, I know, because I know with the the Fed, the interest rates, and they're printing money. And then I know a lot of investors, they're watching the real estate because they're watching the market go. It's hot in a lot of areas and it's skyrocketing, and they have FOMO, fear of missing out. And then but then also you have COVID, and they're thinking, oh, how does this change the real estate market? So I know a lot of investors are going to self-storage and looking at different alternative real estate classes to get some more stability and more returns. So and I also know that you've for someone who's interested in sponsors and syndicators, I know you did a lot of work over that. So what did you learn from speaking to over 500 sponsors and syndicators in the last 18 months?
Yeah, I mean, the benefit here, and I truly was blessed to be kind of the right place, right time, talking to for anybody that follows on LinkedIn, the best that get their 1,000+ likes anytime they share a piece of advice. What I learned is, once again, it's boots on the ground and kind of selecting an area. And sometimes this may not be in your backyard. Once again, very convenient, but particularly multifamily, in case you're going to pay like a 3 cap or something silly, you're probably going back to your home area. You might have, I'll just throw this out of there, kind of spit on the wall, but like a Louisville, Kentucky, somewhere, I know in the Rust Belt, there could be some opportunity. So, some folks have the benefit of, you grew up there, some local management companies. Other ones, you just saw this great need and said, this is where we're going to really focus. That's one very common piece of advice, as opposed to kind of spreading throughout the country and say, I can do stuff everywhere. You're going to get crushed. You do need some local expertise. You need a little bit of, obviously, the context and somewhat of a gut feel, and just say, okay, this is my sandbox that I'm playing in. So I think from there, obviously, we at BV Capital, we call it Texas real estate. We have the ability to go Sunbelt, but we feel that we have focused on Texas for multiple decades, and there's no reason to change that at the moment. So we're going to continue to do that going forward. A second thing I'd say is the education. So even if you don't have a deal, what value add are you providing to your audience? For example, on the tech side, do you have a good platform where they can check in, or is everything still done on spreadsheets? Particularly when you get a certain size, it's much like having a 5 or 6-year-old in diapers. That would just be weird. You kind of have to step up your game as you go through it. And the other thing is what's something tangible that may never directly benefit you. So as we talked earlier, my big takeaway is always, did you know you can use your retirement dollars to invest in real estate? And sponsors should share, hey folks, did you know, hello, my investors, did you know you can also use your retirement dollars to invest in my next deal or a startup or crypto or gold, et cetera. And I think that differentiate by sharing that piece of credibility, say, listen, obviously I'm going to pitch you my deal, but in terms of you being a truly 21st century diversified investor and having the knowledge and have something that's probably, you know, country club cool when you're with the other doctors on the golf course or, you know, in the surgery room, this is something cool that you can share. So that's something that I've always prided myself to. I feel myself and also a lot of other great sponsors always have something of, you know, their superpower, their very deep domain expertise. And it could be something in the weeds with the tax law. It could be something with procuring, you know, for these ground up builds. Keep on sharing that with your audience. A lot of folks are going to appreciate that.
Nice. Yeah. So you've actually gone through a lot of interesting topics and, you know, a lot of interesting questions. And, you know, thanks for sharing all of your knowledge and your expertise. I know a lot of the audience is interested in getting in touch with you. So what are the best ways to get a hold of you?
Yeah, absolutely. So LinkedIn is always great. That's always my easy answer, especially for folks on the road.
Uh-huh.
Next is, and I'm sure this will be in the show notes, but my email, dan.kryzanowski at bvcapitaltx.com. And the BV Capital TX is one word.
Okay.
That's probably the best to reach out.
Yeah. And for all the listeners, we'll get all of those in the show notes. So final question is for you, Dan, is what is the most surprising investment you've heard of someone making, and do you think it's going to pay off?
Uh, yes, and I think it's going to pay off. So let's talk about the maybe not so greatest investment, and that's truly. And I invested in a comedy tour, and I remember sitting there with my wife saying, "Hey, you know, you better enjoy tonight because these might be $1,000 write-offs." And well, you know, the joke was on me. So, like anything, it's once again, real estate's a physical asset. A comedy tour, you know, just YouTube it these days. But what I would say, and this is one of our early customers at Rocket Dollar, and what's funny about pilots, and I'm sure there's a certain level in the medical field, but what's very unique, particularly for the legacy, the larger airlines, is when you're 59 years old, it's kind of like being a senior in high school. You're a cool kid. And then after that, you know, you're kind of out of sight, out of mind because you're hitting your pension, you're about to retire. You can tap into your IRA, your 401k without penalty. It's a really exciting time. So, you know, obviously these pilots have flown the world. And one gentleman said, you know what, I'm going to buy a condo in the Caymans. Great idea. And he said, I have $1 million in my 401k. You know what I'm going to do with it? I'm going to buy 4 other condos. So I can walk up and down the street, you know, make sure people are, you know, you can't go inside it. I just think that that's just wildly successful, tangible. And if we think back over the course of history, that's probably what a lot of people have done in one aspect or another. And then, of course, being able to pass that down as a legacy through family. So that's just something I heard that's like very cool. It's very tangible. And I think it's also going to be wildly profitable, you know, particularly as this person is going plus 60, doesn't have to worry about early withdrawal, et cetera. It's such a great, I think, mutual situation for both him and the folks that are going to be coming into rent.
That's yeah, I think that's wise advice. Dan, thanks so much for coming on the show and for dropping those gems. I know you have another meeting to go to, so we hope to have you back in the future as another guest.
Anytime, my friend. Thanks so much.
Yeah.